You know, no one has confirmed this, but I want you to see an inflection point in the markets today. And one of the reasons why we ended up 336 points on the Dow, the fourth straight winning week for the Dow, and the best start to the year since 1987. It was this report that the Chinese are committed to buying a whole bunch of American imports over the next 6 years, enough to erase the trade surplus they enjoy with this country to the tune of $800+ billion. This comes a day, even though the Treasury Department denied it, where we had hinted we might roll back some of the tariffs and the like against the Chinese and Chinese products ahead of a trade deal as an act of good faith. Market watchers Larry Shover here, Shover I should say, John Layfield as well. John, how much credence do you give these reports? They were obviously enough to propel, especially today, if it's true on the Chinese part, to eradicate the gap between our countries. But how important was that?
It was very important to the market. The market can handle any type of scenario, bad scenario. It can handle Brexit. It can handle a slowdown in Europe. It can handle a slowdown in China. It can't handle uncertainty. And what is uncertain right now is this trade war. Is it going to escalate? Is it going to disrupt global supply chains? That's a very big deal to the market because you can't handicap that and you can't price it. So I think what the Chinese are offering here is a win for President Trump. This is almost exactly, by the way, what they offered in the meeting in Buenos Aires in December when President Xi and President Trump met face-to-face. But I think this time the president might be under the pressure to take it just to get a win, to get out of this thing. It doesn't deal with intellectual property, doesn't deal with all the big things that Lighthouse has a problem with, right. But it could be an off-ramp. Our
trade rep, Lighthouse, you're talking about there. Larry, I mentioned earlier that we're off to the strongest start for the markets since 1987. Now, of course, we know what happened at the end of 1987, but yep. What do you make of that?
What I make of it is that we're in a reset right now. Today, this week, up 2.5%. A lot of performance anxiety, a lot of chasing. Earnings reports are coming out no worse than feared. We have this constant positive reverberation with regards to China, whether it's true or not. The market's assuming that a deal is going to be made of some sort. And beyond that, we have, Williams coming out today, very dovish, saying something brand new, that data dependency not just on rates, but also on the balance sheet runoff. And that's something the market's hugely concerned with. So as it stands now, we're trading at about a 15.5 multiple, assuming $173 for the S&P 500. 20 to 40 points higher from here, it'll start to get hard. But that's what's going on. That's what's happened over the last 5 days.
You know, John, it's interesting. Well, there have been body blows to other markets around the world and China and concerns about a slowdown no matter what happens on trade. Britain, whether it stays or goes from the European Union and the Brexit troubles. We've done okay. Why is that? Is it just a flight to quality? We're a great alternative to all that, or what?
I think that's exactly right, Neil. You look at what is going on in the EU, and if you have something like a hard Brexit, that probably gives the green light to Italy to probably drop out of the EU as well. You probably talk about the solvency of the EU as an entity going forward. That is terrible especially for the continent of Europe. It's not great for the globe, but you also look at the slowdown in China. And when you look at those three big economies, when you include the United States in it, we are by far the best out there. We are in a slowdown, but we're not falling off a cliff. We still have full employment. We had record retail earnings this last quarter. This economy is doing okay. It is slowing, but it's by far the best in the world right now.
You know, Larry, do you worry about that we're priced for perfection the way the month has started? Believe me, a lot of people prefer this than the month before. What keeps you up at night?
Well, it's definitely not the snapback. I mean, although it was a little bit too far, too fast. But what keeps me up at night, if anything, is just like corporate debt. I mean, that's something that's not being talked about a whole lot. Household debt is in great shape relative to 2008. But what does worry me is this credit quality of corporations. And I think at some point, as I mentioned earlier, a multiple of 16 times is about what I think the stock, investors are willing to pay for the S&P 500 because of things like swelling fiscal deficits and also credit quality. So something like that could come unwound fairly quickly, and given like the rapid deterioration of like consumer sentiment, which we even saw today with University of Michigan, it's something that's worth pausing about.
All right. I want to thank you, Larry. Final word on the subject. John always goes without saying. Thank you very much, guys.